Right. Well, good morning, everybody, and welcome to this webinar, an Airmic Live webinar session entitled Navigating the Top UK Risk Trends for 2026. My name is Alexander Frost. I'm the Chief Commercial Officer at Airmic. It's my pleasure to be the moderator, the introducer for today's session, delivered by our good friends and senior partners at Aon. As we know, this webinar is going to go beyond the headline findings from Aon's Global Risk Management Survey, the GRMS, to explore what the trends in the survey mean for UK businesses and how leaders can respond with confidence. So we're going to have a deep dive session that's going to examine some UK risk trends for 2026. We're going to look at some real world examples of risk convergence and its implications, and it's going to provide some practical, actionable strategies to strengthen resilience. Now, just a few housekeeping notes before I hand over to today's speakers. This session is being delivered on the Livestorm webinar system. If you're an Airmic member, you're probably familiar with it by now. If you are not, just a few notes about it. You will see down at the bottom right of your screen, there is a chat tab and a questions tab. Please, if you have questions during the presentation, please put them in the questions tab, ensuring that moderators and speakers can see those questions. I would also point out that this session, as always at Airmic, is being recorded for those members who are unable to be here today. It can be accessed later on through the Airmic portal. And also that at the end of this session, a survey will come up allowing you to provide some feedback both on the presentation platform and on the speakers. Please, if you have time to stay and answer that survey, please answer it. It's extremely helpful to us at Airmic and to our partners at Aon. So without further ado, I'll hand over. Amy, thank you very much, and the rest of our speakers at Aon for giving this presentation today.
Fantastic. Thank you ever so much, Alex. And it's an absolute pleasure to be here today delivering this session in partnership with Airmic. My name is Amy Froud. I'm Chief Commercial Officer for Aon UK Commercial Risk. And joining me today is Chris Scott, UK Managing Director, and Eddie McLaughlin, Global Practice Leader, both who sit in Global Risk Consulting. So in terms of today and the agenda, what are we going to cover? Well, first and foremost, we're going to do an overview of the emerging risk landscape that we're facing today, a new era of disruption. We're going to look at the significant risks that present themselves to businesses, and we're going to use the Aon 2025 Global Risk Management Survey to delve into that detail. And that will lead us on to section 2, where critically we will look at the so what impact do those results have for businesses and business leaders. We'll then summarise and look at the key takeaways for those of you on the session today, as well as looking at the skills that business leaders and organisations need to build greater resilience. So let's go on to section 1. So in terms of the evolving landscape, this is where we're going to be looking at the new risks that are emerging and the accelerated disruption that we're seeing with that. But what's causing that disruption? Let's go on to the next slide. What you can see here is the World Uncertainty Index. And this charts every time the word uncertain is plotted on the Economist Intelligence Unit country reports. And the sharp rise that we're seeing in 2025 shows a clear story. Volatility is no longer abstract. It can clearly be measured. It's showing up in boardrooms, on balance sheets, it's showing up in supply chains and employee experiences. But what is causing that? On to the next slide. We have 4 profound transitions, and at Aon we call these megatrends. And it's the interconnectivity and complexity of these as they converge that is causing that disruption. Let's take each one in turn. The first is trade, which encompasses geopolitics, inflation, supply chain fragility, technology, where we're unlocking transformation and efficiency, but also where we introduce emerging risks that come alongside AI, cybersecurity, and data privacy. Weather is more disruptive and more unpredictable than we've ever seen. And in those extreme conditions, it affects infrastructure and insurability. And then finally, we've got workforce, where we're continuing to look at retention and attraction and retaining talent, and with that, shaping resilience, productivity, and growth. And what matters most is how interconnected each of these are. Let's take an example. We've got a climate event that impacts a supply chain. That supply chain can only be resolved with advanced technology, and that advanced technology can only be deployed through a workforce talent. And that's where we're going to start looking at the next step, that it's those businesses that understand the interconnectivity between each of these that is going to have the competitive advantage and unlock value for the future. And Chris, this is where I'm going to pass to you. So in this risk landscape, what are the risks affecting organisations and how are they managing them? And how can you use the GRMS to really bring out those answers?
Yeah, thank you, Amy. So look, I'll start with a quick overview of what the GRMS is. It's our biannual survey of senior risk leaders, and it's now in the 10th edition, and it looks at their attitude to risk. So what we're trying to do is understand how these senior professionals view the current risk landscape. We start by looking at it at a global basis. So what are the sort of key themes at that sort of global view, before we then sort of move into segmenting that information by industry and by geography. So we can really start to tease out some of the nuances in risk attitude by those sort of different levels of segmentation. And it also looks at their feeling around preparedness for risk as well, because I think the two have to go hand in hand. You know, sort of what is the risk landscape looking like, and how prepared are people feeling for those sort of changes in risk landscape. So with that in mind, let's look at the sort of global risks first. So here are the top 10 global risks, all regions, all sectors. And you can see that cyber attack or data breach is top of that list again for, well, it must be the last sort of 3-4 years now. Yeah. And linked to that as well is sort of business interruption. I think what I find quite interesting about this is the fact that only 2 out of the top 5 risks are insurable, right? So that means that when we're looking at sort of how you as a risk professional help your organization understand and prepare for risk, we've got to think outside of the sort of traditional insurance route. And actually, when we go and step into that sort of top 10, you've got a lot of partially insurable risk. And partially insurable means that we have to think a little bit more intelligently. We have to look at things like some alternative risk transfer mechanisms in order to sort of help protect the balance sheet. And I think that what we're also starting to see with these sort of top 10 risks is exactly what Amy mentioned earlier, the interconnectivity of risk. So, you know, when I look at, cyber attack, for example, that could have all sorts of consequences associated with the other top 10, including damage to brand reputation. It could manifest as a result of a supply chain failure. Regulation and legislative changes are particularly apparent within the sort of cyber and AI landscape. So it tells us that we really need to think outside of silos when we sort of approach the management of risk going forward. So if we sort of dive into what the future looks like, again, we can see that cyber remains top of the tree in terms of ongoing concern. But I've sort of called out the insurability component in the last slide, and you can see here that actually it becomes even more apparent, right? Only 1 of the top 5 is fully insurable. So it just highlights that sort of need to think about all of the aspects of risk management if we're going to stay current and relevant as risk professionals to that broader business. We can see that AI and climate change have started to creep into the mix of a sort of future ongoing concern, which really isn't any surprise. We've heard a huge amount about the potential impact of AI for good and for bad. And that sort of uncertainty, the impact on workforce, etc., is clearly starting to play upon the mind of our leaders going forward. And I also note that sort of geopolitical volatility is expected to grow. So, in the previous slide, it was, down sort of 9, 10. This has crept up to 5. And alongside that sort of geopolitical volatility, we see things that are associated with things like economic slowdown. So commodity price risk, scarcity of material, cash flow, liquidity, and economic slowdown or slow recovery. These are all indicators of a more complex and volatile risk landscape. So, it's never been more important for businesses to take a considered view of risk in order to sort of make sure that they protect themselves going forward.
Excellent, Chris. Thank you. So before we start to look at the top UK risks, we're just going to ask for some audience participation now by taking a poll. And what we want your view on is, what are the top risks facing your organisation right now? So kindly take a minute to engage with the poll and let's see what the answers show us. Excellent. So we've got some coming up right now. And Chris.
Yes, and unsurprisingly, cyber is sort of top the charts with 44% of the vote, followed by geopolitical uncertainty, business interruption, regulatory or legislative changes, and supply chain. So a very clear winner. And I suspect if we were to compare that with the top 5 UK, we would get a pretty stark similarity. So there we have it, right? It's not far away from a direct mirror, actually, of the way in which we voted. And I think that genuinely doesn't surprise me. That cyber risk and business interruption, we've seen so much in the UK media in particular with some pretty significant headline events. When we look at comparing the top 10 UK risks versus global, the top 2 remain the same. Okay, so that's pretty consistent. And shows where risk leaders' focus is, all the way down and across segment. I think what's interesting when we look at the UK top 10 risks is you start to see talent and innovation pop into that top 10. And that says that from a UK standpoint, we've got a slightly different focus and concern in terms of our competitive landscape, how we're going to continue to sort of attract and retain that talent. And of course, talent is often directly aligned to our ability to innovate to meet customer needs as well. So it's an interesting one. And I think, again, it's not insurance focused at all. So we need to think outside of our swim lanes in order to be able to sort of address these emerging threats and issues. So, as a risk professional, how much time do we spend with our sort of HR and talent function? Probably not as much as maybe we should. How are we looking to sort of help drive innovation or protect the ability to take risks when we're innovating? Because there is no innovation without risk taking, for example. And then if we were to look at that sort of future, again, cyber staying very much top of the pile. And I think, I'd sort of tie to that AI sort of driven cyber threats as well. Economic slowdown is very much creeping up the tree alongside that geopolitical volatility. I suspect it doesn't necessarily surprise me that the UK has an enhanced sort of view of the potential risk of geopolitics and economic slowdown, given the differences in our political landscape versus US and rest of the world. Yeah, exactly. I danced around that. Okay. But macroeconomic trends are top of mind for UK sort of risk professionals at the moment. We see increasing competition, rising costs, and I think what that tells me is that there's a real focus on managing negative balance sheet impact or sort of assisting with sort of cash flow. So whilst some of these top 5 risks aren't necessarily overtly insurable, what it points to is a real squeeze to balance sheets. So any opportunity to manage or mitigate loss is going to be, of enhanced focus for our sort of finance colleagues. And I think that risk managers need to start to support their finance team to enhance balance sheet resilience as a result, because UK business leaders are telling quite a strong story that they think that things are going to get squeezed.
Fantastic, Chris. Thank you. And that's the perfect segue. That now that we've covered top risk, we are looking for another audience poll, and this time it's a pulse check on the readiness to manage these risks. So plot your answers now, and let's see what we say. Okay, coming through thick and fast here. Excellent. So, Eddie, this is where I'm going to bring you into the chat. Welcome. Can I get your reflections on what the poll says from the audience, and then also with your thoughts and observations on readiness to risk?
Of course, thank you. And a change of accent to Scottish now. Alex at Airmic decided that simultaneous translation wasn't required, so apologies in advance. So one of the questions in our GRMS is this precise one, which is, are you ready? Or do you have a plan in place to deal with these particular threats? So if we look across the chart to the left and compare that to the results we see, in effect, there's 5 levels of what we call maturity. So anything 20% less would be level 1, all the way through to top end. So the big takeaway really from the chart on the left from our survey is that on average, organizations are prepared for 60% of these top threats. Cyber is at the top end with about 80% plus. One other big takeaway is that between 2023 and 2025, we're actually slightly less prepared than we were before, which might be slightly counterintuitive. But if you do the maths, the real reason for that is the geopolitical landscape has changed and we feel significantly unprepared. So I think if I reflect on the votes, it's very similar. Again, similar to Chris's poll earlier, that's a very similar profile to what we'd expect. And thank you for your honesty, because the reality is that people that say they're optimized and integrated and analytically led, often when you probe below the surface, that isn't necessarily the facts, Amy.
Fantastic. Okay, so we've covered section 1 where we were looking at the overview of the emerging risks. So thank you, Chris and Eddie, for that. So moving on to section 2, this is the critical point, right? So we can talk a lot about what the risks are, but that key piece for the audience today is that so what? How can we practically use these results and insights so that we can bring businesses to look to the future and to make them more risk resilient? So for that, Eddie, your Dorset tones can continue if that's okay. Thank you.
And so, Paula, this slide's slightly busy, but this really is our top 10 observations. Chris has taken us through some of the headlines. If you double click on the detail, and there will be a QR code at the end for you to download the entire survey at your leisure. Maybe pick a few of these sequentially. Cyber. Okay, Chris has touched on cyber, so we won't delve into much detail, but as was mentioned earlier, for the 3rd biennial in a row, that cyber's at the top. It started to feature about 10 years ago and has consistently stayed in the top 10. Maybe a couple of observations from cyber from the previous survey. If you look at something like captives, hopefully most of you are familiar with captives, where you have your own insurance vehicle, there is a difference of about 58% in the cyber premium from the 2023 survey to 2025. But we think that's interesting. There's also 22% increase in the number of cyber incidents over that 2-year period. So what, you may ask? Well, the question then becomes, do you insure cyber? Have you done the analytics? And I don't mean jump to insurance. We mean do the risk assessment. Have you done the scenario analysis? Have you considered what exposure your industry, sector, geography has to cyber? And have you done the analysis? Our numbers suggest about 60% of organizations above $1 billion insure for cyber. It's about 40 or 50 for mid-market and about 34% of charities. So Chris's expertise lies in this world of cyber. It means that at least half the audience, or a couple of hundred people on this call, will not have considered cyber. We think that's a big miss. Pick a few more. Climate. Might be surprising that that's outside the top 10. Chris beautifully diplomatically talked about geopolitics. I'll do the same with climate. It's perhaps slightly less emphatic than it was in the past, but it's still the defining challenge of our generation. And of course, it's linked to things like NatCat. If you've not heard of an SSP, SSP1 to SSP5, then maybe that's a takeaway. They're socio-economic pathways, by the way. They're different climate challenges over time. So what's the takeaway? Speak to your ESG team, speak to your risk team. What is the remit? Have you done the analytics looking at how your organization's exposure will change to different NatCat and climatic patterns until 2050? Maybe I'll skip reputation, other than to say for the purists amongst you, reputation is not a risk, it's a consequence. We do know this is a risk theme, and there are various studies, empirical evidence supporting the impact of reputation on brand. In fact, Aon has our own Pentland Analytics, which is 30 years, actually 40 years of reputational data. There are, of course, other providers beyond Aon. Sorry, Alex. 4, insurability. Chris touched on this nicely, which is if you're purely looking at insurance and you look at that top 10, top 5, only 20% of those risks are largely insurable. When you start looking at other risk mitigation solutions, or the light blue in the previous slide, you get to 50% plus. So if you're only focused on insurance, you're never really going to capture the lasting risk profile of your senior leadership. So takeaway is, look at the other risk mitigation solutions, not just insurance. And by that, I mean alternative risk transfer, parametrics, captives, catastrophe bonds, a whole range of, that might sound jargon to you, but maybe spend a bit of time educating yourself on what are the things that are outside conventional insurance that can solve risk financing challenges. One thing I would say there is you'll often hear this readiness gap or the importance gap. Insurance to GDP has been falling for years. So we're losing relevance as an industry. Also, when we look at some of our own studies, there's a 51% protection gap. Now, what that means is in natural catastrophes, of the 260-something billion losses last year, only 127 billion were insurable. So there's a huge difference between the relevance of insurance and the potential of economic losses. Any others? Maybe to pick one, just conscious of time. There any?
I was going to pick Chris in and see if you've got any disruptive thoughts from what Eddie said, or even if you agree entirely and or want to bring another one up.
Well, I think the only thing I'd say is that sort of quantification and analytics is key to unlocking some of that non-traditional capital and sort of risk transfer. So I think, to me, it's striking that there's still a lack of usage of that sort of analytic and quantification, because as Eddie said, if we're saying insurance can only cover 20% in the traditional form, and we need to get to 50, I think, to be sort of impactful, then we do need to start looking at quantification and analytics to unlock that sort of non-traditional risk transfer mechanism to protect our business from these emerging risks.
And maybe one more, if I may, Amy, human capital. If we look at those 60 risks, more than 10% are in the human capital world. Succession planning, increased equal pay, pension costs, healthcare costs, recruitment. There's a whole plethora of human capital risk there. And the takeaway for me, if I was a risk manager, would be, am I communicating with my HR team? If I look at the role of captives and employee benefits, that's doubled in the last 5 to 10 years. So go speak to human capital team. If you have employed more than 5 or 10,000 employees, then there's a real opportunity to use captives in your employee benefit program.
Fantastic.
And people cause a lot of these risks as well, right? Particularly cyber, for example.
Absolutely. So interconnectivity showing throughout that conversation. So Thank you both. So we're going to move on to our final pulse check now, and it aligns with something that Chris, you just mentioned then. It is that pulse check to understand how you currently measure the effectiveness of your insurance program. So whether that's broker or insurance guidance, internal judgments, you don't evaluate it. There's no judgment at all on any of that. So let's see what the answers show us. Interesting. Okay, so I'm going to ask you both to comment on that. Is that what you expected? And have you any observations based on those results?
I'll have a take for a cut, Chris.
Sure. Yeah.
Advice from insurance broker. We don't say insurance brokers are absolutely critical. Getting the right broker, of course, is important. So that's exactly as we'd expect to see. If you compare that to the chart on the left, it is indeed the largest voting mechanism, both in the survey and in the poll. The interesting stat for me then is if I look towards the middle, Amy, industry benchmarking in quantitative analytics. For those of you who are quick enough to see the previous slide, number 10, only 19% of organizations actually use quantitative mathematics to look at what we call total cost of risk. So the balance between retention and transfer. It's a very common question for treasurers, for CFO and audit is, well, my broker says it, that's great, but can you prove mathematically that I've got the right risk appetite and I've got the right premium? So for me, very consistent, slightly lower on the industry benchmarking analytics. The takeaway is, if you haven't done that industry benchmarking TCOR, then please look into it.
Yeah, and I think from my perspective then sort of, yeah, as we've alluded to, advice from broker remains key. I suppose that's why, you know, brokers or the top brokers are increasingly focused on that data and analytics component because they appreciate that this is fundamentally a data and analytics challenge, right? So
then it's all fun into our own trap, Amy. These are interconnected. You know, most people will do a number of these. In our experience, senior management judgment is almost always the bottom line. But your senior managers, to make that judgment, need the other components.
Take them on the journey.
Yeah.
Absolutely. Okay, and a beautiful segue then to our final section of today. So we've done an overview of the evolving risk landscape. We've provided the so what. And then the final part is bringing this all together. What are the key takeaways and what are the skills that organisations need to build that resilience? So what question I've got for both of you is, what are the three big messages that you want to leave the audience with today? Chris, I'm going to start with you.
yeah, I mean, I think so, you know, it comes down to that not all risks are covered by traditional insurance markets. As such, we need to look beyond just insurance as a vehicle for managing and protecting ourselves from that risk. That links quite nicely to that data and analytics. And I think, you know, it's very easy to look at that just as a way of building and creating an effective risk transfer program. I think if used intelligently and with the right sort of guidance, it also helps us to inform how we structure some of that sort of control and loss mitigation. Because I think it's very easy to get caught up in the risk transfer piece. And of course, risk transfer is important. But if the more work we can do to sort of build out that effective pre-loss mitigation, you know, the less we need to rely on risk transfer in the round. That does mean that we are going to have to be brave as risk professionals. And that does mean that we're going to have to start talking to our on-the-ground operations teams. We are going to have to start talking to our HR teams, our finance teams, in order to be able to sort of complete that picture. But I think, you know, it's a pivotal role that risk managers have in terms of stress testing and sort of bringing together different areas of the business to sort of, you know, address this challenge.
And do you see an emergence of that with the clients that you look after, Chris? Is there a need for it or a desire to look at that, or is that our job to push that forward into the mix more?
I think it's being demanded, but I think there's a reticence to deliver. And part of that is, you know, a little bit of a skills gap. And part of that is trying to sort of, you know, be front of foot and going, do you know what, actually, I'm going to be brave. I'm going to take those leaps of faith. In my experience, you know, people aren't usually punished for trying to do something right, as long as they're, appropriate in terms of the way in which they caveat their sort of viewpoint. But, the last thing that the senior decision makers want in general is yes men, right?
Absolutely. Eddie, from a global perspective.
Yeah, I'd love to disagree with Chris, but alas, on this occasion, he's right for a change. I think there's probably a thread. Data analytics thread comes in everything. Do the analytics for your insurance program, do the analytics around climate, around cyber. So I think that's an obvious thread that cuts right through for me. And total risk transfer, that's captives, it's parametrics, it's a number of things. In Hurricane Melissa last year in Jamaica, if I think of the use of alternative risk transfer, the Jamaican government got $650 million of liquidity payment from the use of parametrics in a catastrophe bond. Now, within 2 months, would conventional insurance have provided that liquidity that quickly? Not in my experience. So, big takeaway again is think of those other techniques. The 20% insurable versus the 50%. Alternative risk transfer fits in that 30 gap. And the other one about risk management we haven't touched on yet. Everyone talks about the upside of risk, but when we look at an organization's ERM or risk management process, and for those of you who have an ERM background or you have that in your remit, where does the upside of risk feature? In your risk maps, where's the upside of risk, or is it just downside? So let's just start thinking about the ability to build in opportunity cost and risk. And AI is probably a great example of where you've got an opportunity as well as a threat. So that's a big takeaway. In terms of trends, there are a number of surveys like this one. Ours is one of that's been going now for the best part of 20 years. Use them, match them to your own organization, match them to your own exposure profile, and take it to your leaders, take it to your management, and say, like, what do you think of this? Just a little nugget. Just be selective in how you deploy that information.
Selective and bold.
And take them on the journey.
Slightly disruptive
Yes.
on your journey.
Yes, make yourself slightly annoying, but not too annoying. Might be a good takeaway.
Fantastic. Okay, any other final comments, Chris?
No, I think that's a good summary. I do like that sort of focus on the upside of risk because I think it's underplayed, and it comes back to risk management as a value driver. If you're working hand in glove with the business, you are going to add value, and we should be bold about sort of articulating that. So this is sort of how we're protecting balance sheet. This is the impact we're having on those decisions around sort of loss mitigation and sort of controls. This is how we're sort of driving that sort of talent agenda, that succession planning, etc. So, I think again, it's step out of that swim lane and think about where you're adding value, and then articulate it because it's probably bigger than you think.
Thank you. Excellent.
Maybe just picking up on Chris's point around that shaping of the future and talent. What does this mean for the profession? Some of us have been around a bit longer than others, and it means that if you don't have those data and analytical skills, acquire some. You don't have to be an actuary, but get yourself familiar with the mathematics and be curious. Sometimes when we bring our graduates on board in Aon, the first question they ask is, right, how do you get a successful career? And my honest advice would be very simple. Be curious, be innovative, challenge a bit, not too much, and also just be available. Everyone loves people that solve problems, not people that create problems. So a lot of it's soft skills as much as hard skills, but the mathematics, the financial acumen for me is vital as we go forward.
Thank you very much. Right, I think we're going to now hand back to Alex because we've got some time for Q&As. Alex.
Yeah, brilliant. Thank you very much for that, Amy, Scott, and Eddie. I think that was a great dive into the survey and look at those top risks. We have had a number of comments and questions coming through. I'll spare you from the comments, which I'll send across to you afterwards, but let's focus on the questions at the moment. So first question is about regulation and legislation and legislative changes, and you referenced them today. They're asking for a clarification. Do you mean risk of non-compliance or the risk of general disruption from the imposition of new regulation?
Yeah, so I believe it's the risk of change of regulation and legislation. So, we've talked about the pace of change from a sort of geopolitical standpoint and from a technology standpoint, that drives changes in regulatory posture, that drives change in terms of, the need for additional regulation. And I think sort of, if you look at cyber as a nice, easy example, right? We spent a lot of time talking about regulation for data, and now it's shifted where regulation is primarily focused on sort of resilience and managing upside. So yeah, that change of regulation is the core driver, I think.
So not necessarily the punitive element of not following regulation, although that remains a risk, the uncertainty and the complexity for business in following it.
Yeah, I mean, that's obviously that's the net result, isn't it? Right, is failure to comply.
Yeah. I think it falls nicely into the risk cause consequence, Alex. The consequence is potential punitive damages in some geographies, fines and penalties, censure. But the underlying risk is perhaps your lack of knowledge or your failure to comply with the pace of change of regulation. So it's a risk theme rather than a specific targeted. You've missed GDPR or you've missed the AI Act.
Yes. Yeah.
Thank you, Richard. I think that was Richard's question. Thank you.
How you manage it, quite so. Right. So we have another question, which is in terms of increased competition, because this was referenced a couple of times. Do you mean increased competition internationally from places like China or between different countries, or general market competitiveness, that there is increased competition simply for business in markets? Or both?
I'll take first go at that one.
Thanks, Eddie.
It's a bit of a fluffy answer, Alex. It's both.
Yeah. What is it?
It's a risk of new entrants, which of course could be Chinese competition. It could be AI-enabled tools. It could be better data analytics, upsetting existing markets, existing major organizations. So it really is, it's a catch-all for, are you aware of your new competition, your emerging competition, and some of your USPs? There's something called quarters four forces, and this fits nicely into, are you aware of your competitors? Are you aware of new entrants? Are you aware of your USPs? And that's how we think about the world of competition.
That was much better than my rather flippant answer of yes.
But the answer is
yes.
There's a question I think that is linked to that, and I think this is particularly interesting. This is a question on geopolitics, and interesting to me because I used to be a geopolitical analyst with the government of Canada in a previous life. And it's when we talk about geopolitical risk to an organization, you often talk about disruption or you talk about regulation in a certain area, you talk about the difficulty of cross-border trade, but is increasing security threat incorporated into geopolitical risk? And I think they're obviously thinking about what we saw in Greenland, what we're seeing in Ukraine. We're thinking about war risks, the possibility for large interstate conflict. Does the survey reflect that when it talks about geopolitical risk?
You have me to speak, Evans?
Yeah, well, I'll have a first go, please. Correct me when I'm wrong. But look, I think this almost gets to the nub of the challenge with risk, right? Which is people's perception of risk differs and people's interpretation of risk differs.
Yeah.
My mind, yeah, absolutely. I think the security implications of geopolitical volatility are front and center of my mind when I would answer a question like that. And I would expect that to be the case for a lot of our survey respondents. If you'd have asked me the question 2 years ago, would I have been sort of talking about potential, land invasion of Greenland? Possibly not. But that sort of large-scale conflict it's an ever-present risk we've had now for at least the last 5-10 years. Yeah. It's just really apparent.
Yeah. Something additive, Alex. You're the expert. You should be answering this question, by the way.
Well, I'm well outdated by this stage, Eddie.
But I guess yes. I mean, we have an interconnectivity of risk tool, and if we double click on geopolitics, you will get expropriation, you will get security risk, you will get civil commotion and riot. So there's a range of potential threats that all fit under that geopolitical banner. And more recently, it's been trade disruption. To Amy's point about the megatrends trade, it's tariffs, the imposition of tariffs, which of course impacts supply chain. So it's a very big interconnected systemic risk. Interestingly, geopolitics has dropped 8 or 9 places in this survey, but it's not in the top 10 in the US. So we'll let you know why that might be the case.
Yeah, this I always found one of the most interesting things in that field, Eddie, was we would talk about geopolitics, but as you just pointed out, it covers sort of 10, 12, 15 different perils, risks and different perils under that. And I think what they were referencing obviously was, large scale damage from things like war, which traditionally there have been exclusions about when you think about your insurance and how you prepare for that. So that's extremely helpful to understand.
When we see this, we think political risks, we think credit risk, we think the expropriation risk, but it's much broader than that, much broader.
Yeah, and you made a very, very good point there, I think, about how you communicate what is risky. You know, if I say to you, I'm interested in geopolitical risk, you say you're interested in geopolitical risk, do we have the same concept of what that is? Do we have the same understanding of what a risk is in that kind of field where it's not always easy to quantify? And there is a question, I'm jumping on a little bit, but there is a question about how you go about reframing risk and risk management as a value driver with senior leaders in the organization. You know, how do you impress upon the board what you think is risky compared to what they think is risky, and how do you make them understand that and prioritize the risks that you think the organization should be prioritizing, because you can't always necessarily put a monetary value on it.
Yeah.
And then, yes, there are a few things there. If you have 56 risks on your risk register, that's fine at the operational level, but not at the management level. No more than 10 to 15.
10.
So that's prioritization. I think one of the other questions talks about how. Well, impact and likelihood is a fairly typical way of prioritizing, but
Yes.
be careful with black swans. The low probability, high risk events, in my view, are actually more dangerous than the top right-hand corner, which says conventional wisdom is high likelihood, high impact. What about the low likelihood, very high impact in that top left box? So think about those black swans, those big show-stopping events. I would focus on those.
Yeah. And that actually, I think you saw that question, Eddie, but that was a question we had a little bit earlier on, which was what is the criterion for a top risk? You know, how did Aon assess what a top risk was? Was it like a likelihood or was it impact? And I presume it's also what respondents have simply said as well, that they view as their top risk. So anything you can tell us about that?
Well, the only thing I was going to say is sort of, you know, I sometimes take a step back and look at the strategic objectives of the business, because that's actually a useful sort of litmus test in terms of what matters to management. And it also gives you something that's quite nice to sort of use as a bridge into risk, because you can sort of pull it back to the so what to the business. And if the business says, these are the things that matter to us because they are what we're trying to achieve, couching risk in terms of, you know, impact to that is quite an easy way to sort of engage stakeholders. And to Eddie's point, it allows you to talk about black swan type events that wouldn't necessarily be in that sort of top right, high risk, high likelihood. You say, hey, you know, we say we want to, you know, enter into this market. What if this quite unusual event were to occur where, you know, I don't know, a president of a major power decides that we're no longer allowed to operate in said country or environment?
I'm sure I don't know what you mean.
Me neither, yeah. It's very hypothetical.
Yeah, it's very hypothetical.
In terms of those who want methodology, Alex, if you download the report in the appendices, there's chapter and verse on demographics, methodology, prioritization, if that's helpful. Do you mind if
That is very helpful. Thank you.
Can I give you a question to pose? Neil Timberlake has asked an interesting question that we debate at length. It's to do with the interconnectivity of risk.
Yes.
Doesn't resonate with the insurance industry. Trying to ever go that one, because I think it's a really good point. The world is becoming interconnected. Insurance is trying but failing. And what I mean by that is that, precisely to Neil's point, if you try and place what we might call a multi-line policy, so combining property with liability with maybe financial lines, it's very difficult. There are only 4 or 5 markets that can legitimately do that portfolio theory across multiple lines of business. What they tend to do is write it that way, and then they send it back to the property underwriter, the casualty underwriter, the D&O underwriter. We have to change. That insurance to GDP, that relevance gap, until we change and align ourselves to the risks of organizations, insurance will become less relevant over time, in my view. So a really good point. We need to be more portfolio thinking. CFOs don't think in single motor risks. They think in portfolio, they think in capital, they think in value at risk.
Yeah, and I think tying it more closely to the way in which, you know, the finance and senior leaders view risk and volatility is important. I think that's the sort of mind shift that the insurance world needs to adopt to stay relevant.
It touches on another question that we see, Alex, which is insurance as a mitigant for risk. It clearly is, but if you look at your ERM process or your internal audit process I'm willing to bet the vast majority on this call do not have insurance as a mitigant in the same way they do a controls assessment on their ERM risks. Why not? Insurance is clearly a mitigant. So build insurance into your risk register thinking, into your audit thinking as a risk transfer mechanism in the same way as other types of controls.
Do you think, Eddie, Chris, can I just ask, this is a question we sometimes debate at Airmic, do you feel like the insurance industry is moving toward a more blanket, integrated, portfolio-based response to certain kinds of risk, or is it through innovation and new providers and new startups actually becoming more fragmented, even though there's more possibility and more capacity in the marketplace?
Interesting question. I think it's a bit of both. There's no question that disruptors and new competition stir the pot for some of the organizations that have been around for 100 years. There's no tales out of school. Insurance is generally seen as quite sleepy. But when you start getting into things like the use of capsules for M&A, matching cyber risk to your scenarios with your CISO and thinking about parametric triggers for your Caribbean windstorm, then I think we're becoming more relevant. But my personal view is if we're just placing a property policy in the same way we've done it for 100 years with wording that's 100 years old, that has a role to play, but it will not be a big prominent part of the future portfolio of managing risk, in my view.
Yeah, and to sort of build on that, I think, it's incumbent on us as risk managers and as brokers to sort of, be a bit of a driving force and sort of articulate what we need to see from the markets in the future, because they will, by their very nature, respond. I mean, I think your point around the introduction of sort of smaller niche firms, MGAs, that sort of thing, stirring the pot is interesting because, it does lead to a little bit of fragmentation at that sort of lower level with the big capacity sat sort of up here doing very traditional stuff. But I do think that over time, if we continue to engage with some of those niche firms and we continue to push, that capacity will start to follow suit and become a little bit more sort of broad. I hope it does anyway, because I think otherwise the insurance continues to become less relevant.
Fundamentally, supply and demand, Alex. Our clients are telling us these are our challenges. This is the demand I want. And if we don't supply to those challenges, someone else will. Some other industry will, banking or some other disruptor.
Some disruptor.
Assuming we can articulate it appropriately with data and analytics, just to
plug that
back in there.
If we can quantify it, we can solve it.
So no webinar at the moment would be complete without a question on AI. And we have one, which is how important is AI insurance, AI coverage going to become in the next 10 years? When do you need to start to consider cover for it as essential as cyber? And this goes to the heart of the top, Revy. Our surveys at Airmic mirror your surveys at Aon that cyber is always the top risk. How cyber is defined in any given year, of course, is very different. So when we think about cyber liability, I beg your pardon, AI liability or AI risks, of different kinds, how soon do you see that becoming a top risk?
Well, that's one for you, Christopher, for sure.
Go to Chris.
I might tell you that's
the
easiest question of the day. So look, I think in its current guise, AI seems to be an accelerant for risks rather than a standalone risk in most organizations. So what I mean by that is, when we look at the downstream consequences of an AI event, it's usually a cyber event or it's a liability event or some other form of actually relatively insurable impact. And at the moment, markets seem to be relatively comfortable with that sort of state of play in the round. So what we're really focused on is making sure that we don't get exclusionary language around AI or really sort of daft, definitions around AI. There are some specific products for organizations that are looking to sort of build and sell AI-enabled tools, etc. And I think that's likely to increase in sort of prominence as the AI ecosystem develops and things become more integrated with AI. I mean, everything from your watch to your phone to everything is having an AI component. So that's definitely something that we're going to see. Is there appetite to carve out AI like they carved out cyber? when I'd be more comfortable looking at my sort of brokers to answer it. But at the moment, my understanding is no, we're not necessarily in that direction of travel. So, I'm hopeful that we can sort of maintain common sense and ensure that, we have robust and fair definitions of AI, and only segment it out for things that are really AI specific from a risk standpoint, sort of, AI enabled products and services, that sort of thing.
We have a follow-up to that's just come in, which is how do we address the insurability of AI and PI? And I think that's to sort of what you're speaking about.
Yeah.
Good. And it depends on sector. Is that
Exactly.
PI is that for doctors? Is that for construction? Is that for dentists? So everything sort of depends a little bit on what's the risk profile, what's the insurability, what's the data analytics that support the premise.
Yeah. So we've got a final question, and I think it's more specifically about geopolitics again, but I think I'd like to broaden it out to give you a chance to sort of answer in a broader way for the profession, which is in light of Mark Carney's speech last week at Davos, how enabled is the wider risk professional community to be prepared for the future geopolitical world, which is going to be fragmented. It's going to have evolving business landscapes. But in answering that, perhaps you could also say a few words about how prepared you feel as brokers, as risk management advisors, how you feel the development of the risk profession is shaping up in response to these top risks.
Yeah, happy to first go at that one, Alex. Yes, but I think the Carney speech in Davos might go down as one of the most seminal speeches of all time in the next 10, 20 years.
As a proud Canadian, I of course agree. Only two other people have ever had a standing ovation at Davos, and they were Vladimir Zelensky and Nelson Mandela. You wouldn't really put Mark Carney in that, but hey, go ahead.
Well, we also claim him as a British, as former governor of the bank. So, I think if you take that speech and you look at the components, I think what he's really saying is what a lot of your questions are impacting on. The old world order is dead. Those types of alliances that are inflexible and are based on East and West are gone. He is basically saying you need more flexible alliances. The world is becoming more volatile, as Amy pointed out with VUCA at the beginning. So I cannot agree more. It's about flexible alliances. It's really understanding the more subtle dynamics of how NATO operates, rather than just assuming that you're always going to have a defensive mechanism like a NATO in place. I totally agree with that. I like it. It was fantastic. I didn't realize you got a standing ovation, but when I looked at the content, I thought, yeah, very good. As for the future community, I think we need to look at that. We need to listen to it and figure out what does that mean for our profession? What does that mean for solving these types of problems? If you look at the data that we had, geopolitics is actually the one where people have least plans in place. It's not an easy one to solve. But as you know from your background, you've got Maplecroft, you've got a bunch of others, Concilio. There's a range of really specialist providers in this field, in addition, of course, to ourselves having some capabilities in this world.
Yeah, I think from a professional standpoint, from a personal standpoint, I find it a bit terrifying. But from a professional standpoint, I actually find it quite exciting, because risk and sort of people that deal in risk have never been more exciting and interesting to engage with, because we've got something to say, right? And I think it is kind of on the risk and insurance professionals, we kind of got to jump on this. We kind of got a solution, and if we do solution, we'll get a seat at the table, and we'll be seen as impactful to decision makers. So professionally, I'm excited. Personally, terrified.
Yeah. I like that honesty for you, Chris. I would just say that, and the word that mirrors very much how what we are feeling at Airmic. I think the word we hear most of all in response to this new world, and you have said it many times today, is resilience. We must be much more resilient organizations. We must be much more resilient countries. The debate that we like to have at Airmic is, what do we mean by that? How do you define it? How do you build it? How do you maintain it? And it's all about flexibility in a rapidly changing environment. And I think more and more businesses and more national and supranational authorities are going to be encouraging businesses and handing down frameworks for how you build that resiliency, and to meet any of the top risks that you've identified in your survey.
Well, we run a UK client council every year, Alex, and last year we had Sir Alex Younger, who was the former head of MI6, and he said something very similar.
Mm.
He said the relative benign calm you've had over the last 20 years is the atypical bit.
Yeah.
The volatility we're seeing now is the typical bit over generations, which probably aligns well with your favorite Canadian speech.
You hear that said quite often, don't you? The people who are historians say, actually the period we've been living through has been an anomaly in the way the world usually is. But the mental trap that we all fall into, business leaders and individuals alike, is that we always think the world will be the same way it is now. And it's not. And I think risk professionals are actually better placed than most to say, well, it's not always going to be that way. And we must be prepared for it.
Scenario planning. Look at alternative future.
Yeah, absolutely. So we've come to the end of our questions. There's only a few minutes left until the hour. I don't know if anybody else on the call has any more questions that they'd like to pose the audience. Beg your pardon, pose the speakers. But if not, perhaps my colleague Amelia could bring up the survey so that people could provide some feedback. There it is. And that will give you a chance to provide any final thoughts you have on the system or on the content. I would encourage everyone here, if you have not, on the back of this presentation, to go ahead and get a copy of the Global Risk Management Survey from Aon. I have no doubts it will be on the Airmic website very soon, if it has not been put there already this morning. And if you have any further questions, you can contact myself or anybody else in the Airmic team, and we would be happy to connect you to Eddie, Chris, and Amy. I'm sure you guys would be happy to hear from the Airmic members any future thoughts they have. But it's my pleasure to thank you all for making the time, for being here today, for making the time for our members, your clients who are on the call. Really, really helpful insights and a good way for us to think about building resiliency and how we strengthen our organizations. So thank you, Amy. Thank you, Eddie. And thank you, Chris. And we hope that we'll have you back on the Airmic Live webinar series again very, very soon.
Fantastic. Thank you.
Thank you very much. Have a nice day, everybody. And thank you for